Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, May 8th, 2019. Markets are closed now, but I want to do a video on the semiconductor stocks, not only because we have a swing trade on there, and we don't have many active swing trades right now, but because I think this sector could be setting up for nothing short of explosive gains. I don't mean to be dramatic, and listen, I know there are a majority of traders out there and investors prefer long side trades, and I've mentioned right now a few things that I feel comfortable with, TLT, gold, things like that, and there are some stocks I keep mentioning. I'll get to those, and I will do a video, and I did recently. I've done a couple long videos, or actually quite a few in the last couple months here of unofficial trade ideas. So let me not digress. Let me just go over this, and I want to paint the longer term picture, and this sort of ties into the comments I made earlier about QQQ and the markets. If we do get another leg down that either comes close to testing or undercuts the lows from December 24th. So the point I was trying to make there is, you have to make a decision in a trading plan. If the charts start to continue, I should say, continue to firm up the bearish case this week, and we put in some big bearish candles, see some very bearish price action, and by that, what would that be? How do you differentiate a regular correction from something maybe more? And that would be early support levels that buyers should be stepping in at, getting smashed right through like they're not even there. Very impulsive selling. A lot like what we saw in the fourth quarter last year. So again, those are ifs, but there's a few times, usually it's not even a few times a year. Sometimes it's just a few times every few years, or I should say once every few years, you have some big moves set up in a sector, and I think we could be looking at one here in the semis. One thing I'll tell you about the semiconductor sector is it is cyclical. It doesn't, it usually picks a trend, and that trend's pretty strong. There's not a lot of in between. In other words, bullish or bearish. The trend's either going up strong or going down pretty strong, and they're fairly unidirectional. So on that, before I roll into the charts, let me tell you one good thing about this. I'm going to go over potential targets, where I think the semis are probably headed over the next, let's say within the next year, probably even less than that. When they fall, they can fall pretty quick. So if the charts play out, I'll just tell you right now, easily down to any of these three targets here, and that would be a drop in the SOXX from where we're at right now, not even going to the highs where we've already fallen about 29, almost 30% downside there. And even if we had just hit that 170-ish target, you're still talking a 16% drop. Now here's what I like about the SOXX, because it is very unidirectional, either rallying or correcting, rallying, correcting. Once in a while you get these sideways trading ranges, but they're not very common. And so therefore, I talk about this, and you can talk about it a lot, and you can read about it under the FAQ page, the decay on ETFs. So where I'm going with this is, and I might even roll this into the official trade, semiconductor, SOXX is a semiconductor 3-time bearish ETF. And it tracks the same sector we were looking at a second ago. The SOXX, that ETF, tracks the PhilX SOXX semiconductor ETF. So I want to point that out first and foremost. They are, apples to apples, because these guys are tracking the same ETF sector. XSD is another semiconductor sector, but it has a different basket of stocks with different weighting. So is SMH, another semiconductor ETF. Again, a different sector. Or I'm sorry, a different index and a different basket of stocks. And they're all going to move roughly together. There's a lot of overlap, don't get me wrong. Now, the point I wanted to make here is that usually I'll recommend, as would you read on the internet, stay away from 3-time leveraged ETFs as anything more than day trades or very short-term trades because of the decay. However, I write about this in the FAQ page under ETF related questions, that decay can actually work for you in the right conditions. And the math, I explained the math in there, but let me just show you an example here. So eyeballing this chart, let's just look at this. Let's just zero in and pick a drop here. Here's SOXX. Let's just go back here to 2015. We had a nice healthy correction. So what I'm going to do for you is measure this correction right here from high to low. You'll see my pop-up box on the left. Yep, I grab the top of that candle, come down here to the bottom, and if I can hit right on there, it'll snap to it. And that is about a 30% drop in 30% drop if I have it right on there. I think I do, yeah. Yeah, we'll call it 29% drop in SOXX. Close enough. So now we go to SOXX. Oh, and by the way, remember that was right here. It was about mid-2015, right about in the middle of 2015, down to about the beginning of the fourth quarter or so, or just before it. Pretty quick drop. And so 29%, we go to SOXXS, the 3-time leverage short. I'm going to zoom into that period right here. Here's 2015 because I want to capture right there, right at the lows, and go up. Now, first of all, so at best, if there was no decay, you would think we'd get about a 90% or technically 87% return, right? 29 times 3. But you can see there we actually had, or it produced a 140% return. And again, I explained that in the FAQ page. It's the math, how it works. So these 3-time leverage, when you get a fairly unidirectional trend, the leverage works for you. So that's that could be a very nice setup. And again, as I often say, stocks tend to fall a lot faster than they rise. And of all the stocks out there, the semis, when the switch flips from bullish to bearish, they can move pretty quick. So now we're going to spend the rest of the video looking over charts. But I just wanted to point that out as a trading proxy, and it's nice as well if you have you don't have a margin account, you have a regular cash account, or maybe an IRA account. That's a way to gain short exposure as well. And you know, and if I'm wrong on let's say if I'm right on the correction, but I'm wrong on how it plays out. In other words, we do this for a while. Let's just say the semis up top, but we do this. SOXX isn't going to do as well, and it could even underperform. So just keep that in mind. But all right, let's roll into the charts here now. So here's the semis, and this is a 10-year weekly chart. I'm just going to measure out the corrections to kind of give you an idea. It's like trading the stock market on steroids because the trends are so large. There was a 31% drop. The rally leading up to it was about 56%. From this low to that high there, you had about a 122% rally, and again, I already showed you, I think that was, yeah, that 29-30% drop there. So you get the point that the moves are big. They're supersized, if you will. And what do the charts tell me? Well, back here, you know, you can see when you get clear uptrend lines like this, pretty clear uptrend lines with a lot of reactions, you look for the trend line breaks. All the better if you have the negative divergence leading up to it. There was our sell signal. There was our sell signal. Here we had a breakdown and a back test right there. We treaded sideways for a while. We were in a trading range, this trading range here, but that was the top. And until all was said and done, semis dropped. I'll have to turn off the annotations, but from there they dropped about 24% or so. And now what happened since then is we had negative divergence right here. These small divergences at that high, that was actually the peak right there, so I should have measured from there, but about 25%. That was almost an equal high. It was a slightly lower high, so there's where we peaked. So that was the correction, and since then we've had a sharp ramp up, you know, along with the broad market here. And what that's done is it has only extended the divergences that were already building up to that point. So we now have much larger divergences, which set the stage potentially for a much larger correction, especially if those divergences are confirmed and then play out. By confirmed, we need to see this PPO cross back over and roll down and make a bearish crossover, and it would be ideal to see it happen now. I think it will because we already have a sell signal. That's a nice thing about it. Here's the SOXX weekly chart, and you can see we have a solid weekly candle. We haven't closed the week yet. I'm going to say that. We're only Wednesday, so now we're 3/5 through the way of the week. We have 2 more days, Thursday and Friday, to trade. Anything is possible. But if we can get more downside this week and print a nice big red candle, that should help seal the deal. You know, here's where we had a top followed by a big red candle. So let's see if we get a big red candle. And more importantly, this one comes on a break of a very well-defined trend line. PPO is starting to roll over. RSI is turning down off overbought levels, and so a lot of what I see in the chart tells me that we will visit these targets and these are rough swing targets as well for you if you want to look at the weekly chart. And from the scope of this bull market, I believe there is the potential to do more than drop down to that 144.20 level. But let's just look at that now and focus on that. So we'll call it about a 30% drop from here. All right, I'm going to go through these charts relatively quick. Now what I'll do is I have a watch list loaded of all the components of SOXX. It's not too many. We only have 31 stocks. I'll talk fast, run through these fast, and in this video I'll probably just focus on the weekly charts because I don't want it to be a 30+ minute video. If there's time at the end, maybe I'll go through some of the top components like Intel and Taiwan Semi and those, and show you the daily charts. But this, again, what I'm trying to do here is paint the bigger picture and help you formulate that mindset. If this SOXX trade plays out that we have on right now, and I have just typical swing targets, do you want to book full profits then, or if you get profitable in that trade, do you want to set a stop at some point when when the second or third targets hit or whatever? I can't remember. We might only have one target on that now, but when your profit target is hit, you can either at that point obviously book full profits. You can lower stops to protect profits, maybe not book profits, but lower your stop at a point where if you're stopped out, you'll still have a gain on the trade. Obviously, you'll have to give some back. There's many ways to do it. Take partial profits, let some run. I could sit here and talk all day on all the different strategies, but again, trying to paint the big picture here. So here's Intel, the largest of the semis, and you can see on the chart, self-explanatory. I've covered it many times in the past. These measurements just show you after the divergent highs how much we've dropped each time. 28, 34. They're on average about 30% drops. You can see that there. These numbers were put back here before we broke down from this wedge. I was highlighting that back in 2018, and right before it broke, I had listed these two targets, T1 and T2. It says 26% total because we didn't have a sell signal when I first was highlighting those. We pushed a little higher within that wedge, and then boom, you can see the big red candle right there once we broke down. So we went on, hit my first target to the penny, bounced back up, and simply extended the divergences that were in place before. So my outlook hasn't changed, and this is kind of reminds me a lot of the broad market. It made a marginal new high, but I'll consider this the next leg down on the correction that started back here, because again, it was just a marginal new high. It was a divergent high, a lot like in the market now. This one, we do have the divergence confirmed, and again, I can't say it enough, this is the leading semiconductor stock out there. And so when the leaders of a sector start to roll over, you need to take notice. It is possible Intel goes through its own correction and the rest of the semis continue higher. I will say that anything is possible, but it's certainly not very likely. So as you can see, the selling has been very impulsive. That was all kicked off with the earnings. A lot of big red candles so far, and I still maintain that next target, which from where we're at now, forget about 32, that was where we broke down here. From where we're at now, if we hit that level, you're talking about a drop of another 22 or so % for Intel. All right, next up would be Taiwan Semi. Intel, by the way, is a $230 billion stock. Taiwan Semi is number 2 at about $187 billion. So roughly a triple top so far. We haven't really rolled over yet, at least not on this weekly chart. Again, I'm looking at the weeklies now because they give you more reliable sell signals when you get them. If we happen to continue a little higher and we take out the previous highs, we will have done so with divergence in place, as you can see there. And remember, divergence is not a sell signal. It's merely an indication that a trend change, an impending trend change, is likely. Sell signals come like this. See that beautiful red candle right there on the trend line break? Very well-defined trend line. That's what you want to look at. In the semis, I'll tell you, they can be a tough lot to trade. There was a great long-term sell signal, but look at the kickback rally. Took us above that level before it rolled down. And if you had given this one some room, that would have been a nice trade so far. In fact, we're just back about where it was then. So this could have been a long-term short back there. you'd be underwater on it, but I still think over time it will pay out, and this one will go a lot lower. But watch this trend line right here. Watch for the PPO to roll back down, confirm the divergence and everything else. AVGO, Broadcom, there's your wedge pattern, divergent high right now. You can see big divergent high too on the weekly, not little divergent highs like we had here. These, keep in mind, guys, remember, we're looking at one of the longest bull markets, one of the longest and strongest bull markets in history. So it goes to the left of this chart, 2009. So you're looking at these, even though they're drops of 20, 30% or more. That one's 30%. That one's probably at least 30%. Those are merely corrections in a bull trend. If and when a bear market comes, then you can expect a lot of these semis, and I've seen it time and time again, 50, 40, 50, 60, 70% or more. That's how much they correct a lot of these semis during bear market cycles. So there's huge profit potentials. I know I'm beating the bearish drums and been doing it for a while, but I wouldn't be doing my job if I didn't tell you what I see here and where I think these things can go. Nvidia, NVDA. I think Nvidia. I think that bubble popped when the Bitcoin bubble popped. Nvidia, yes, they sell. There's a lot of gamers out there. They're the big GPU maker, well, one of the two big GPU makers, Nvidia and AMD. And the GPU, graphic processing units, that's what a lot of the Bitcoin miners, especially individuals, not the big professional companies, they were buying those high-end gaming cards and running them all 24/7 to mine Bitcoin. But that bubble popped, and so did the Nvidia bubble. So there it is. This chart just speaks volumes to me. This is a major, major top. It was a major bull run. There was a lot of demand for the video cards, and that demand has certainly or apparently dropped off. We had this wedge. When it broke, we set up in a smaller wedge, and then when that broke, I mean, just look how much it's fallen already. And that's been 54%. You might say, why would I want to short a stock that already dropped 54%? Well, because it's the same stock that went up in just a matter of 6 or 7 years or whatever that is, about 3,260%. And again, you just look at the chart. Mean reversion would take it back to this long-term. Here's a long-term uptrend line. I'd have to go back a ways. That trend line goes to the left of the chart, but I wouldn't be surprised. In fact, I'd favor a move down to that trend line, and that's about another 80% downside. What I can tell you is this was a support level about 187.60 right here, and we broke that. We back tested and we failed at it so far. It's a little long to be a bear flag, but it is a price channel, I'll tell you that, on the weekly chart. And a break of that price below that price channel would be the catalyst for a move down to this target zone I have down here, about 113, all the way down to about 95. Again, huge divergent high that foreshadowed that big drop that we've had so far, 50+%. And then the trend indicator. PPO, I like to use that PPO signal line. You guys know that. It's one of my tried and true trend indicators. Does a good job of telling, it's not perfect, but it does a good job of telling you when the trend is bullish, when the white line, the last of the two to cross there. And all this time it said stay long, the primary trend in NVIDIA is bullish. And crossed bearish here and said, well, somewhere in here, I'm not hitting it exactly, and it's clearly still in that bearish trend. Again, a primary trend indicator. TXN, Texas Instruments, divergent high, trend line to watch. So a lot of these, quite a few of these have broken down these minor trend lines. We had these more important, more significant trend lines in many cases. Each of the semis have their own unique charts, and then we had the rallies off the December lows. That's what I'm looking at. Some have already given way, like Intel that I showed you earlier. Some haven't. So just like I was pointing out those three FANG stocks that haven't broken those comparable trend lines off the 24th of December yet, Amazon, Apple, and Microsoft, you've got the same thing here. And if you watch some of these leading semiconductor stocks like Texas Instrument and some of these others start to break those are pretty powerful sell signals. And for not just quick swing trades, but trend trades where you might be able to tuck away a short. And I think Texas Instruments will come down here to that my target here about 86 83.70. That's about a 25% drop from where we're at now. And the big divergent high tells me before the next bear market is over, we'll come down here to about $59. And that would be a drop of about 47, close to 50% from where we're at now. Qualcomm, powerful stuff, but a lot of this would have to do with the settlement between with Qualcomm and Apple, and the way in favor of Qualcomm. I don't see a lot. I'm not going to try to extract anything from a chart that I can't see. It's just a big green move, very news induced with that settlement. Broke out to new highs, but I would put very good odds, and I said it before, that pop above there, it would probably fail, and we'll probably come back in at some point. So let's not spend a lot of time on it. Maybe I'll get to the daily charts on that one, and if not in this video, possibly in another video soon. Especially if there's demand for it, guys. You, as members, just let me know. Even a silver member, put comments under this video if you're a silver member. Hey Randy, I want to see the daily charts because I'm interested in shorting some individual semis in addition or in lieu of the SOXX short trade, and I will be more than glad to go over the daily charts, which will help hone in on entry and exit prices, price targets, things like that. These weekly charts, these are rough targets, semi-rough trend lines, things like that. So ASML, nice trend line here. We had this trend line which was broken, divergent high, wedge, everything else, and then we had this longer trend line here which was broken as well, and it's just recently was back tested. So now we're wedging. So that's really the pattern. If you want to just forget about everything else you see there, you have the back test right here, and then a trend line which will trigger a sell signal if broken, and especially if this support level 188.50-ish, we'll call it, if that gets taken out, that opens a door for a move down, and I don't see a whole lot stopping this stock until about the 115 area. Certainly, there'll be some support here and probably a bounce around 140 or so on that previous reaction low. MU, Micron, you can see all the notes. You can freeze this video again. I'm going through these relatively fast just to get through all the names. But divergent high, again, this shows the trends. This is what I want to talk about, how large in magnitude these trends are and how profitable it can be to trade these stocks long and short. Divergent high, 67% drop. Little divergent high, 18% drop, but just like now, the divergence only extended and grew larger after that little correction, and then that set the stage as these divergences built for a 74% drop. Divergent high 1. I don't know if that, I guess if I put, that was, I think I was estimating at the time back here what the drop would be when we got there. Or back here, I can't remember, but these are notes I had on this chart. That was my first target zone, and divergent high 2, and boom, there was our sell signal when the trend line broke. That first target zone was hit. We went almost to the second target zone, bounced, and we're rolling over now, and I still think we come on down here to my second target, which would be, I don't know, whatever it is. It's a $26 right now. And I may certainly add additional targets. Again, just depends on how things play out. If the semis are ready to roll over, they're going to do it soon, I think, from the looks of the chart. If not, maybe the market goes to new highs and it takes the semis along with them. Let me put another line right there because I think that would be a little stop along the way if that $26 level breaks. ADI, analog devices, the wedge, big divergent high. We had a divergent high at this point right here when that trend line broke, and we just made a high level back test. I've seen these before. That's what I refer to as a high level back test. Sometimes you come in and back test pretty quickly afterwards. Sometimes, especially in stocks that tend to have these big trends, you can come back in at higher levels, and we're certainly rolling over right now, about to confirm the divergence. AMAT, this is one of the leading chip equipment makers. So this company makes the machines and equipment that makes chips. They're the chip equipment makers like AMAT, KLAC. They're the canaries in the coal mine. When they start turning down, that is usually a tell that things are slowing down the semiconductor sector, because the semiconductor companies like Texas Instruments, for example, or Intel, they're not going to order equipment for new chips. They're going to slow their orders or cancel those. So and again, it's a big trender. There's a 46% drop. There was your last divergent high in AMAT up here back in early 2018. The stock fell 53%. We just broke trend recently here on this weekly chart. It's not very well. That's where I'd put it. It's enough that I would put that trend line there, and I would say it's valid. And there's a big red candle now. So, barring a crazy stick save into the close on Friday, this one will have printed a sell signal, a breakdown on that minor trend line there. And we also have your resistance up here. In fact, there's also resistance. Yeah, right here I should have a line. There's a reaction low right there, another reaction low. So basically that's where we failed, right around that $44, $45 resistance level as well. So there's another, I'm liking what I'm seeing in the semis right now. And a week or two from now, if all these that haven't broken down, if these break down, then that's pretty much an all-in. That doesn't mean put all your money in the semis. It just means that's about as good as a sell signal gets, and at that point, I'll have an overweighted position, on the semis short. And again, because these are long-term charts, I'm not going to be looking to take profits when I make 5%, 10%. I'm looking to swing for the fences on this one if everything else confirms. The charts of the broad market, and most importantly, the charts of the semiconductor stocks. So there's Lam Research, nice bearish rising wedge right there. So we need that one to break as well. So you can replicate these charts or bump me for an update anytime you want, and I'll let you know, when some of these have given way. I don't see a lot on Xilinx, so let's move on. AMD, I'm not crazy about the trend line, but that's the trend line I'm watching now. This is, of course, a big semiconductor stock, but as far as market cap goes, it's actually only 27 billion, 27.6. Remember, Intel is $230 billion. So Intel's almost 10 times the size of AMD. So this one's not going to move the needle on the sector, on the semiconductor sector as much. NXPI, there's a trend line. You can see that. MCHP, there's a trend line. KLAC, again, another chip equipment maker. You can see my notes here. I have a couple arrows. So what you want to look for on a stock like this, I should add another one right here. Let me do that. And you can probably read the notes or up there if you can't. What it says is a big red weekly candle after an extended uptrend typically marks a major top. So when you have a powerful uptrend and then all of a sudden you get a big red candle, ignore big red candles when you're chopping around. But when you have just a strong near vertical uptrend right there, and then followed by a big red, well, you can make it out here, red candle, whether it's a bearish engulfing candle or not, that usually does the trick. And these are big drops. I could measure them out for you, but I've already done that on plenty of these stocks. I can tell you it's well into the double digits, and there it is. So look at the red candles after that uptrend. Big red candle there. That one didn't pan out for much, so I'll point that out, that we had a red candle, kind of a funky uptrend. We had a wedge and everything else. That just proved to be pretty much a false breakdown. We went down a little bit after that, but then we gunned it up. So that's the thing in trading. Remember, even the best looking chart patterns, the best looking setups, whether bullish or bearish, may not always work out. So never fall in love with the trade, never become married to it. Always use stops, and you'll live to see another day when the trades go against you. Big red candles, and of course this is just a strong unidirectional uptrend followed by a huge red weekly candle, and the week's not even over, and look at the size of that red candle right there. So KLAC looks done. Any more downside this week should or in the next week or so should give us a bearish crossover here on the PPO, which would confirm the negative divergence that's been building. Remember, we had a divergent high right here back in early 2018, and from there the stock fell already 35%. This is a much bigger drop. Therefore, I would expect at minimum another move back down to that 83.94 level. And from where we're at now, that's still about a 25% drop. And that's, again, at minimum. Could quite possibly see much more. Maxim trend line breakdown, back test 1, back test 2, and that's it. So we'll see if it starts to roll over from here. Could probably put a little minor trend line there. There's not a lot of reaction so far. MRV, Marvel Technology, this one failed recently, a lot like the S&P 500 so far. Double top failure. Here's the highs back in 2018 right there. Tried it again, punched through it. That was a failed breakout, in fact. And by punching through it, it put in a slightly higher high, which gave us right here this divergence, which will be confirmed if the stock continues to move lower. So small divergences back here led to a relatively small drop of, I'll turn these lines off, and I missed the high. That drop was 43%. So I'd hate to see what a this divergent high can bring for the stock. And again, you can look at this. This was a bull market correction right here, and that stock dropped 70%. And this is the nature of the beast. Just look how volatile the business model is on this stock, or at least the trends that it goes through. Due to whatever factors it has going on in its business. All right. We have a few more, and then I'm going to wrap it up. I'm not going to be able to get to the daily charts. Skyworks, SWKS, pretty much failing here at about the $88 resistance level. Tried to pop above it, failed. ON on Semiconductor, it's testing downtrend line resistance now. QRVO, not a super well-defined trend line, and we don't have a lot of history. It's a weekly chart, but the stock's only traded publicly for a few years now. So let's move on. TER, Teradyne, could certainly add a trend line here, and one to watch. And also on that one, watch this recent high. It's coming up, and it's testing the previous highs from back in 2018, where so far we've seen several stocks already, semiconductor stocks, fail. CREE, Cree, they make LED light bulbs and things like that, which of course have circuitry and I guess whatever. It's in the semiconductor sector here. That's a trend line to watch. Very steep uptrend line. This one tends to have some sharp trends in either direction. For years, it's done nothing but go sideways, and recently there's a possible downtrend line breakout here. But again, watch this uptrend line, and birds of a feather flock together. It's very unlikely if we're going to get a 30, 40+% drop in the semiconductor sector. Most of these stocks, if not all, will be dragged down with the sector, if that is the case. MLNX, when you see a stock like this with these funky looking tight candles, that means a stock. That usually means that they've been they're going to be bought out. Somebody's made a bid to acquire them, and that's just the ARBs. You'll see the stock trade around as the ARBs. Wait, because a deal can sometimes fall through last minute, or maybe another offer comes in. But in other words, don't trade those stocks. Gosh, I learned that early on as a trader. I had a position in a stock, and for weeks and months it was going nowhere, and I realized that the stock was going to be acquired. So live and learn. But now I've learned to recognize those when I see them like that. CY, Cypress, Semi, kind of messy. I didn't update this one yet. Let's just move on. MPWR, Monolithic Power Systems. Nice clean up trend line, very well defined, many reactions on that trend line, and then it was broken here, back tested again, divergent high. This to me is a stock that looks like it's going lower. There was your breakdown of the primary uptrend line. Back test one, came in, back tested again, and it's set up with this minor uptrend line below. So it gave us this wedge type pattern, and so far this week, if you zoom in tight, you see a big red candle. We gap down below, and we are trading below, and it would take one heck of a rally to get a stick save this week to close back above there. We'd have to go at least 8% rally from where we're at just to regain that minor trend line. Probably not going to happen, and these divergences tell me this stock has a lot of downside to come in the coming months. ENTG, Integris, there's your little trend line, minor uptrend line to watch. There's your divergent high that says this one is probably seen better days, or at least once that we get a sell signal via break of the trend line. And target area around 23, minimum target again. If these start to play out, believe you me, you will see more videos in the semiconductor stocks in the coming months. When I get on a sector, if it's one like this, that has a lot of potential, I will continue to do updates on this and engage this sector actively. So there's a potential longer term target. All right, MKSI, MKS Instruments. Here it is. So it's similar story. That's the theme as I go through all these stocks. Again, on the weekly chart, a lot of these semis, not all, but a lot peaked back in 2018. That's when the bear market for many of these stocks again, because they certainly in bear market if they've dropped that much and they're still that much off their highs. And so, again, I've talked about the S&P 500 recently and then and the extent of the rally we've seen off the December 24th lows. And if it does prove to only be a bear market rally, the word I use for it is magnitude. We had one of the largest bull markets in history. Therefore, you're going to have big swings, whenever the next bear market starts, whether it's underway now or whether it's coming soon or whether it's coming 2 years from now. You probably see very big, very profitable trends to trade. And in this one, if you look at it this way, that could be the first leg down. This would be the first kickback rally. I can tell you this, whether it is or not, and we're going down much lower. We have a break here, big red bearish candle, I should say, and back down through that 88.75 support level. And this one looks like it's going lower based on the look of this chart. SLAB, Silicon Labs, another one double topping right now. So these stocks have the potential. Could they power through and maybe a little bull flagging action there and break out to new highs and burn out the divergences? Anything's possible. And if that's the case, I'll update you guys. I'll keep the SOXX trade on as long as it looks good. And again, I may extend those targets. I may even at some point roll that trade into an SOXX trade if things really look like we're going to get in that kind of meltdown type stage in the market where the semis and the broad market are melting down. But as of now, that's what you're looking at. Divergent high, double top. Look for a failure there. So far it's rolling over, but nothing big. And again, we're getting down to the point. These guys are small. This one's only a $1.4 billion company, and doesn't look so hot to me. The chart. I could draw a trend line right there. That'd be your trend line. There's your breakdown. Still well below trend. Back testing the 40-week exponential moving average. We're going to wrap it up here. And once again, if you guys want any of these stocks, if you're interested in trading, just drop me a line in the comments section below the post that I'm going to put this video in. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.